Hello, today is April 12, 2025. It's Saturday in Japan and the time is 5:25 p.m. Today, I want to talk about how former President Trump tariffs, what people are calling Trump tariffs, might lead to the weaker US dollar and what that could mean for Japan. In my view, Trump tariff policy is actually a negotiation tool for pushing the US dollar down. I think most of the high tariffs will be removed in future talks. Trump also seems very focused on not non-tariff barriers. One example is Japan's consumption tax, which he sees as unfair to the US. And the Japanese government is planning to go to the US around April 17 for trade talk. If Japan agrees to reduce some non-tariff barriers or support a weaker dollar, the US might remove some of the tariffs. If that happens, the dollar might get weaker and the yen could get stronger. Looking back at history, we had the Plaza Accord in the 1980s, and that caused a strong yen and eventually led to Japan bubble economy. Um, back, back then, Japanese companies exported a lot from Japan. A stronger yen hurt them badly. Today, it is different. Big companies like Toyota and fast retailing have factories overseas. So even if the yen gets stronger, the impact is smaller than before. Also, if the yen gets stronger, it will help lower import price. That could ease inflation in Japan. Right now, both CPI and PPI are high, and retail sales growth is slowing, so the government may bring in economic policies like cash payment or tax cuts, especially before this summer's upper house election. And there are talk of giving 40,000 to 100,000 yen in cash to each person and cutting the consumption tax. That would help boost consumer spending. Combined with a strong yen, this could support the economy without causing too much inflation. The Bank of Japan still have room to adjust policy to manage any inflation risk. Stronger domestic demand could also support stock price, and corporate earnings could improve, especially for companies focused on Japan. Also, we are seeing a big increase in inheritance transfers compared to 6 years ago. The number of inheritance has tripled. That means wealth is shifting to younger people, mostly in their 15s, which could lead to more spending. All of this create a tailwind for Japanese stock. US stocks, which had been very strong, seems to be slowing down a bit. Gold is very expensive now, but I think it's near to a top. In good economic times, gold is not necessary. So investors who had moved from US stocks and gold may start looking at Japan again. I think that's already starting to happen after the recent drop in Japanese stocks. It could be a great time for Japanese equities. Option trading in Japan could also become very exciting in this kind of the market. After the recent correction, sentiment is fresh again. Current stock price levels also make it easier for new money to come in. And earnings season is coming up. For example, fast retailing results weren't but good good things, and many companies may report strong domestic performance that could lead people to say Japan looking good again. We may be entering a new phase, something like a new Japan as a number one story. History repeats, A weaker dollar leads to a stronger yen, but instead of recession, Japan might benefit thanks to today's different condition. One more thing, which are rising too, that also supports the economy. China is in a kind of deflation environment. India is doing well, but not enough to lead global market yet. That makes Japan a more attractive choice compared to others. Tourism might also stay strong. People who enjoyed Japan once may come back, even if the yen gets stronger. So I don't think stronger yen will hurt inbound tourism much. So I think this new Plaza Accord moment could be important, depending on what's decided in the April 17th talk. We might see a new equity story emerge for Japan. That's it for today. Thank you very much for listening. If you like this episode, please follow me and see you again tomorrow.